Hello everyone, welcome to the channel. Whomsoever are following my channel, right? Please, I request you, if you have not watched yesterday's video, kindly go and watch it once. This will give you confidence on the way you're trading. Okay, always I've said like watch the market at 10:30, and what we discussed yesterday we clearly discussed that if market opens slightly gap up and if market gives a small rejections in the form of like this, then I'm interested to take the market down. Then if we get a confirmation like this, I will be interested to take the market higher. This is exactly what I told yesterday, right? So let's see how the market played out. This is the market at 10:30. I'll switch to 1 minute time frame to give you even more better clarity as to what rejection means. If you see the internal structure here, what you can simply do is just draw a line here. Okay, this is the last swing point low. This is the last swing point high. So in order for us to plan a rejection, what we should think is we wanted a closure below this. Then on pullback, we wanted to take the market down. This is how your thought process should be at 10:30. If the market continues to go up, let it go up, because this is not in our plan of execution. We don't have a demand to enter from, because market opened the gap up and market is continuously pushing up. I'm not interested to take the market higher. I wanted the market to come back to a demand. The demand which we have is a gap which we have marked as part of earlier price action. All right. So let's allow the market to play forward a little bit and see how the market reacted. So here, if you see, market came down and broke the structure, right? So what does the structure now say? Market came down like this first, went up, and now broke this point. Now what we want is a small pullback and enter put. This is how you should plan your trades. Where we have as a supply is this particular uh, green candle or red candle. Wherever you wanted to mark, you can take this as a supply. But since you are in extremely lower time frame, you should keep your stop losses at least till the swing point to be on the extremely safer side. In case if you wanted to have a very strict stop loss, you can have the stop loss till this last swing point, not more than that. Okay, and what did we say it as our target is? Like this is what we wanted to see as a target, right? So I switched to a higher time frame. This is where I had entered personally. And if you switch to a higher time frame and allow the market to play forward, market was slightly slow initially, but this move is the beauty of learning. Where is your entry? Entry was 620, 25, 620. What is your stop loss? 650. Hardly how many points? 30 points. What is your target? 470. From 620 to 470 is almost close to 150 points. Tell me one YouTuber who told you to enter like this and capture such a kind of good trade. You can follow 100 channels, because the reason why I'm saying to all my people who took my course also, right, I always tell them one thing: don't follow 100 channels. Don't do that, because the moment you follow 100 channels, right, you will get confused and you will start to think like, okay, market can do this, market can do that. Your thought process will be completely messed up during the time of trading. You will think, okay, market is going up, let me enter call. Okay, market is coming down, let me enter put. You will start to firefight the market. You don't want to do that. Instead, what you should have is a clarity of thought process as to how the market is reacting and where should be your entry point, what is the reasoning behind your entry point, what is my stop loss, what is my target. If these three things are clear in your head, nobody can stop you from making profits. Okay, so I hope this video makes sense to understand you at least to how to plan your entries better. Even in 5 minutes, you can see that there is a closing, there is a pullback to the supply, and you can keep the stop loss as discussed in 1 minute time frame. Also, you can clearly see this target being achieved. You can extend the targets, you can keep on trading after this. I don't care. That's all your psychology. My thought process is I have to book my profits from the moment my target hits. or the moment my SL hits, I have to close this trade and look into some other work. So what we have as part of price action here is, we see that the market has come down to a particular demand, okay, and market has given a small positive reaction from here. Okay, so the moment market crosses this particular swing point, that is 530, 540 to be precise, on small pullback, I'm interested to take the market at least till 590 as a first target. If market extends 590, we can see the target extended all the way till this particular open supply which we have around 25,700. Okay, this target is slightly difficult to achieve because selling pressure is more than the buying pressure. We need strong closures. What I would prefer is, I would prefer a selling again if the market opens gap up around 25,585. I'm interested to see if the market again gives a negative reaction here, just like today, and if the market does like this, I'm again interested to take the market down. This is going to be my ideal position and most preferable trade. If it happens, well and good. If it doesn't happen also, it's fine. We can trade day after tomorrow. There is no urgency to trade every day. Day before yesterday, we did not trade. Today, we captured 150 points. Every day, you need not trade. Okay. So have this mindset. If market opens flat and goes down, I'm not interested. Okay. Because where is the market gonna go? If market can, this entire region is a demand, right? Market can bounce back from anywhere in this place. So it is highly risky to enter put, okay, and it is highly risky to enter call because market is falling. So ideal position is if market opens gap up and gives a negative reaction, it's gonna be more ideal. Or if market opens flat and starts to go up, the moment we get closures also above 510, also I'm interested to take the market slightly higher, at least till here, till 590 being the first target, and I will book half my profits here. And if the market extends above this, then I will trail. After this particular supply, I will start trailing the market for every candle to candle, or even every 10 to 15 points once. I will start to trail based on the structure. This is going to be my trade plan for tomorrow. If you like the analysis, make sure to like the video, subscribe the channel, and follow for more such educational content. Thank you so much for watching. We'll meet in the next educational video.